Did you hear that? That was the sound of 37.6 million ounces of silver vanishing from COMEX vaults in just 47 days. That's the largest drain since 1980. And you know what else happened in 1980? Silver hit $49 an ounce. Then, the entire futures market nearly collapsed. Now, fast forward. February 14, 2025. 4 major South Korean banks stopped selling silver. Just stopped. Not for a day, not for a week. Indefinitely. China has blocked its citizens from buying physical precious metals. Russia is banned from the London trading floors. And right now, something is happening that shouldn't be possible. The spot price of silver is trading above the futures price. That's called backwardation. In plain English, people are paying more to get silver today than for a promise of silver tomorrow. That is panic buying. This isn't about silver just going up. This is stage 3 of a 4-stage pattern that's played out through all of human history. And when stage 4 hits, the price won't matter, because at any price, you won't be able to find it. 3 times this pattern has happened before. 3 times, the people who saw it early made generational wealth. And 3 times, everyone else stood there wondering what the hell just happened. By the end of this video, you will understand exactly where we are in this pattern, why it's different this time, and what the Hunt brothers' $17 billion lesson teaches us about what not to do. Let me give you the pattern. It's brutally simple. Stage 1. Establishment. A commodity becomes money. Governments back their currency with it. Prices stay stable for decades. Everyone trusts the system. Silver was in every American coin until 1964. You could walk into a bank with $1 and get silver. Stable, predictable, trusted. Stage 2. Manipulation. Someone realizes they can create paper claims on physical metal. 1 ounce of real silver becomes 10 paper contracts, then 50, then 100. Paper is profitable. Physical is expensive. So, they flood the market with promises. The price drops because it looks like there's an infinite supply, but there isn't. Stage 3. The squeeze. Demand for physical metal grows. People start demanding delivery. The vaults drain. Everyone realizes simultaneously there aren't enough ounces to cover all the paper claims. Panic sets in. People rush to convert their paper to physical, but the physical doesn't exist. Stage 4. The break. The paper market collapses. Trading halts. Delivery failures cascade. The price goes parabolic for physical metal, while paper contracts become worthless. The people holding real metal win. Everyone else learns an expensive lesson about owning something versus owning a promise of something. That's why the price won't matter. When stage 4 hits, there is no paper price, only a physical one. And I'm going to prove to you, using COMEX's own data, that we're already deep into stage 3. But first, you need to understand why silver is different from every other commodity on Earth. Gold is just money. Silver is money, and the most critical industrial material in modern technology. Your phone. Silver. Solar panels. Silver. Your cars, electronics. Silver. Medical equipment, 5G towers, even missiles. Silver. Every single technology defining modern civilization depends on it. And we're running out. We're looking at a 149 million ounce deficit in 2024, the 4th straight year. We're mining less every year, and using more every year. The solar panel industry alone could drain 85 to 98% of global silver reserves by 2050, according to a University of New South Wales study. Now, watch what happens when we apply this pattern to what's happening right now. But first, let me prove this pattern is real, with the most dramatic example in history. 2 brothers, 200 million ounces, and a plan that almost broke the entire financial system. Nelson Bunker Hunt and William Herbert Hunt, Texas oil billionaires. In 1979, they started buying silver. Not a little, everything. They accumulated 200 million ounces, half physical, half futures contracts. Their bet was that the dollar was dying. Inflation was at 13%. Nixon had just killed the gold standard. Fiat currency was collapsing. Silver was real money. And they weren't wrong. In January 1979, silver was $6 an ounce. By September, $10. By January 17, 1980, it hit $49.45. That's a 724% gain in 12 months. The Hunt brothers were worth billions. And Wall Street was terrified. Why? Because they weren't just buying paper. COMEX panicked. The vaults were emptying. If the Hunts kept demanding delivery, the exchange would fail. So, COMEX did what exchanges always do when they're losing. They changed the rules mid-game. January 7, 1980. Silver Rule 7. No more new long positions. You could only sell or hold. They were freezing the hunts out. But silver kept climbing. Then, on January 21st, margin requirements were raised drastically. Overnight, holding futures became impossibly expensive. The hunts needed hundreds of millions in additional margin. They scrambled, they sold, and others panicked and sold too. March 27, 1980, became Silver Thursday. Silver collapsed from $21 to $10.80 in a single day. The Hunt brothers lost $1.7 billion and declared bankruptcy. The system almost broke completely. But here's what everyone forgets. The people holding physical silver, not futures, but actual metal in their possession, they didn't lose anything. When the dust settled, silver was at $10. That's still 66% higher than where it started. The people who bought physical at $6 and held through the chaos made enormous returns. The Hunt brothers failed because they used leverage and paper. The system changed the rules on them. But you can't change the rules on something you actually own. That lesson matters because we're watching the exact same setup today, and it's actually worse this time. Remember, in 1971, when Nixon closed the gold window, same pattern. Foreign banks demanded physical gold for their dollars. America didn't have enough. Nixon ended gold backing. Gold went from $35 to $850. Silver went from $1.40 to $1.49. The same pattern destroyed palladium traders in 2001. Russia, which controlled 60% of the supply, mysteriously delayed shipments. Physical vanished. The price spiked 263% in 2 years. Paper traders got crushed. People holding physical metal became very, very rich. 3 examples. So where are we right now with silver? Let me show you. Stage 1 is complete. For 150 years, silver was money. Stage 2 is complete. Once silver stopped being money, Wall Street created the paper market. For every 1 ounce of physical, they issued 50, sometimes 100 paper claims. The largest silver ETF, SLV, claims to hold 440 million ounces. But read the prospectus. They can settle in cash if physical isn't available. Your silver might just be a promise. Stage 3 is active right now. On October 1st, 2024, COMEX registered vaults held 80 million ounces. By December 3rd, 2025, just 43 million. That's not normal profit-taking. That's a bank run, and it's accelerating. On November 17th alone, 6.13 million ounces were withdrawn in 1 day. Remember those South Korean banks? If they can't source silver, what does that tell you? China is hoarding for the state. India's silver imports are hitting records. Add in the insane industrial demand from solar, EVs and AI. We are deep in stage 3. The squeeze is active. Stage 4 hasn't fully arrived, but we're at the door. When the CME briefly halted trading in November 2025, they called it a cooling failure. Veteran traders know what that really means. Someone big is in trouble. COMEX has 2 options. Change the rules, like in 1980, or let the market run and watch the price go parabolic. But this isn't to Texas billionaires. This is global demand. You can't change the rules on everyone. When stage 4 fully hits, trading halts will become common. Delivery failures will cascade. Physical dealers will charge $80, $90, $100 just to get metal. Then one day, the paper market will freeze entirely. People holding physical silver will watch from safety because they already won. This isn't speculation. This is pattern recognition. And the pattern is screaming. So, here's what to do. First, understand the difference between owning and speculating. Buying physical silver is protection, an insurance policy. Only one option works. Physical metal in your possession. In your hand, in your safe. Second, buy now while you still can, and while premiums are reasonable. Today, you might pay $3 to $5 over the spot price. When the squeeze accelerates, premiums will be $20, $30, or even $50 over spot. Eventually, there will be none available at any price. Third, focus on recognizable, liquid forms. Silver coins like American Eagles, or 100-ounce bars from recognized refiners. Liquidity matters when the system breaks. Fourth, scale appropriately. This isn't about going all-in. It's about smart allocation. Maybe 10 to 20% of your assets converted to physical silver. Enough to protect you, but not so much that you're destroyed if something unexpected happens. Fifth, store it properly. A home safe, or a private vault where you control access. The entire point is to remove counterparty risk. The window is closing, not because of hype, but because the vaults are emptying. Backwardation is screaming that supply is gone. The market is telling you the truth. Every fiat currency in history has failed. The US dollar has been fully fiat since 1971. That's 54 years. We're on borrowed time, and you cannot print silver. So, here's my question. Are you going to wait until the market breaks and wish you had acted? Or will you recognize the pattern, trust the data, and do something while there's still time? The choice is yours. But the window won't stay open forever. If this made sense, subscribe now, because what I've shown you is just the beginning. The silver market collapse is one symptom of a much larger systemic failure. In the next video, I'll show you how deep this goes. The currency crisis, the debt spiral, all following the same four-stage pattern, all headed to the same inevitable conclusion. Subscribe, watch the next video, and learn how to survive what's coming. Because people who see the pattern early don't just survive, they thrive. The clock is ticking.